Hello, investors. This is Ted Zhang, Associate Portfolio Manager with Revere Asset Management. Today is Tuesday, July 16th, 4:27 p.m., coming to you from Fort Lauderdale with tonight's Revere Roundup Daily Market Insight video. Let's jump right into it. State of the market, definitely an uptrend. In fact, I've labeled today's action market firing on all cylinders and mega caps breather. So into the trend gauge. Market leaders, bullish uptrend, short term above the 21 EMA, medium term above the 50-day simple moving average, and long term, every index that we track is above the 200-day moving average. There's really nothing too much to be said here. And the Qs are still relatively extended, but we'll talk about the action and go over why we believe the markets are firing on all cylinders. So what happened today? 21 over 21 list, up 1.01%. 15 up, 1 sideways, 5 down. Big 8, like I talked about, mega caps breather, down 0.43%. And after having carried the markets on their shoulders, it only makes sense for them to take a breather and for other stocks to get some love, which is exactly what is happening. RG8, I'll show the chart later and compare that to the big 8 chart composite that I've created on TradingView, up 2.18% today. S&P up 64 basis points, while equal weighted up 1.71%. The Qs pretty much flat, up 0.04%, with the QQQE up about 1%. Dow, huge breakout today, up almost 2%. Mid caps about up 2.47%, and the small caps took today's shine at 3.41%. Global 60/40 up 0.47%, and then Grow today was up 0.69%. So jumping right into some charts, starting off with S&P. New all-time high close, trending above the 8 EMA. There's really nothing too much to be said here. I'll pull up the RSP, compare that with you. We broke out this huge base weekly chart into new all-time highs. That is part of our thesis or of what we're observing why markets are firing on all cylinders. The S&P 493 is finally participating and seeing extreme inflows now. Qs still trading within that downside bar, which is not the strongest action, but we're still trading under this 500 level pretty much at all-time highs. And if you compare it to the QQQE, we've blasted into all-time highs and continue to make new all-time highs. And again, part of our observation that the market is firing on all cylinders. Dow as well. Look at this huge breakout today, clearing the 40,000 psychological level like it's butter this week, almost at 41,000. Again, markets firing on all cylinders. Now on to mid caps. After that CPI, I call it a macro EP, just a macro catalyst. Future interest rates expectations are down, which means small caps and mid caps do well. And look at these 4-day move straight into new 52, actually all-time highs for the mid caps. For the Russell, amazing action. Look at this RS line breaking the downtrend line, just straight vertical. We broke about above this huge weekly base that we've been talking about, and this is exactly what you want to see in a stage 2 breakout from a stage 1 base into a new uptrend. And we are in clear 52-week highs at this point. The VIX still at this low volatility area, which is exactly what we want to see, and which is why we've had such smooth uptrends. The dollar has been down after lower interest rates and a huge bid in bonds. Gold, new all-time highs today, so that's significant. I've been talking about this box formation, and gold was buyable today. Gold miners also making new 52-week highs. Extremely strong action. Silver poking its head out as well and building the super nice cup with handle here. Weekly base looks great as well. Cleared that huge area and now above this level right here, and it's actionable. And we actually added some today, and I'll go over that in the tail of the tape. Bitcoin, extremely strong action. This is the IBIT chart, but I'll switch over to TradingView and show you the actual Bitcoin chart. We have undercut and reclaimed this 56,500 level, as well as a 60,000 psychological level, which coincides with these lows here. And now we reclaim the 50-day, even though it's declining, but we are finding some resistance at this all-time high anchored VWAP. Once we take this out, I expect us to retest this 68,600 level, which is the 2021 all-time highs, and we'll see how it develops. But Bitcoin is looking really good, and we've also gained some exposure in that area as well. Global bonds, great action as well. We broke out of this pivot that I talked about before. TLT is probably similar action. Yep, here we go. And because there's a bid in bonds, rates have retreated, and that's presented a very favorable environment for trading, and especially the small and mid caps. And before I head to the tail of the tape, just wanted to compare SPY G and then SPY V. And as you can see, SPY G was the one that was leading. That kind of looks like the mega cap Qs. And now SPY V is the one that's breaking out. And we're seeing money flowing into that area. And once again, this contributes to our observation of markets firing on all cylinders. And then another comparison I wanted to make, which I've made on the podcast before, is my TradingView Big 8 composite, which has been in a steady uptrend for quite some time if we look at the weekly chart. And now this RG8 composite, which has completely blasted out of this base that I've talked about and highlighted on previous videos and podcasts, this level right here. And when we cleared that, it's just blue skies right now into new 52-week highs. And this has presented us a very constructive and favorable trading environment. All right, now to the tail of the tape. So the only really news today is retail sales is greater than expected. Day count, it varies depending on what index you're looking at, but doesn't matter too much right now since we're pretty much firing all cylinders. There's so many areas of the market acting super strong. So there's definitely names buyable. And this is a really the action right now paints the perfect picture of why the S&P and the Q's action does not equal the market's action, because those are such heavily weighted in the mega caps that they could get dragged down by the mega caps, like an example for today. So if you're only focused on those indexes and not buying because you think it's extended, you've missed out on the mid caps, the small caps, the value, and the other equal weighted areas of the market. We're up 11 days above the 8 EMA, 31 days above the 21 EMA. Historically, that's definitely long in the tooth or long in the rally. Expectations, of course, right now positive. And then today's sectors, bonds are up, so bond prices are up, so bond yields are down. Banks, bios, genomic stocks, Bitcoin and miners, gold and silver were all strong today, and pretty much and so many other sectors that couldn't fit on the tail of the tape. Today, two sectors were down: semis pulling back and uranium stocks. So what we did in the portfolio today, we trimmed SMCI and CCJ. We added to SLV and coin for some more silver and Bitcoin exposure. We also hedged the Qs with SQQQ since we do have some semi exposure there, and the Qs are looking weaker relative to the other equal weighted and smaller areas. And we did offensively trim TNA and UWM because they're up over 20%. After these 4 days up, typically we'd probably see some mean reversion. And the leverage goes both ways. So when you pull back, it definitely eats into the gains and it can be vicious. But we did decide to buy some SDVY, which is a small caps dividend ETF. So we still have exposure to small caps and we get some nice dividends. And the bottom line, as I talked about, market firing on all cylinders, and the mega cap tech rests today. So let's talk about, I just want to add a little bit to this video as well. Just quickly go over some breadth and why the markets are so explosive. Go to net highs right here. Look at this explosion in net highs, 730, clearing all the other peaks of this entire bull market. NASDAQ as well, breaking that bear divergence and seeing net highs flow in as well. NYSE and NASI, once we cross the 10-day MA and the RSI cross about 30, we've ripped up, and that has reflected in the action of the stocks, and same with the NASI. And then we talked about the percentage of stocks above various MAs and how there's a bearish divergence. We've completely resolved that, and this is extremely constructive. We were living below the 50% level on the percentage of stocks below the 200-day, and now we've ripped back above, and we're making new 52-week highs. And this now is a situation scenario that we hope for. Instead of price dramatically pulling back to meet the lack of breadth, we now have breadth meeting price. And what this means is that now we are more favorable on the markets to continue trending upwards, especially of what we've seen in those various charts that just broke out of huge stage one bases. So let's go over some individual names. Let's just quickly go over the 21 over 21 list, and some big movers and the losers on the day. ITB Home Builders Index, lower rates is favorable for home builders, and that has ripped so far. Kind of looks like the IWM chart, and it makes a lot of sense. Huge base here, looks like a double bottom, and we're taking out that middle peak, so higher prices are expected. ARK, this is engaging as well, extremely strong action. Coin, which we added on to, higher high relative to yesterday. This next logical area of resistance is this 264 level. Go on the weekly, that's a pretty clear level as well. And then we have the highs of 283. GDX, gold extremely strong, new 52-week highs. Uber today, poking its head out of this sheet here as well. Biotech, so many bios are acting super favorable along with the IWM. Broke out of this downtrend line and has just been vertical ever since. Have a resistance around this 104 area, so we'll have to see what it does there, but likely we'll have to pull back and build a handle here. On the downside, SMCI, why we trimmed. It came out of this super tight pivot right here and squatted immediately, so that's not the action we want to see on day one. And then we made a lower low, breaking the 21, the 8, and almost the 21 EMA. So trim some there. Uranium stocks are weak. Had a nice move up on CCJ, but it's just one lower low, two lower lows, three lower low, closed below the 50, 8, and 21, which is why we decided to trim. NVIDIA, still fine action, just basing now. Semis have had such a move up in the last year and a half, so it only makes sense to see some profit taken. And then APP on the 21 over 21 as well. Tried to break into new highs over 88.5, but so far reversed. And then Lilly was the last red name. Still trending extremely well above the 8 EMA, so there's pretty much nothing to complain about here. So, as always, we would love to hear from you. And my name is Ted Zhang. I'm Associate Portfolio Manager at Revere Asset Management. You can email me at ted@revereasset.com. My Twitter is TedHZhang. You can also reach out to Dan and Don at revereasset.com. And as always, our phone is 855-REAL-WEALTH, and that is 855-732-5932. You can also visit our website at revereasset.com as well. We named our flagship portfolio GROTECTION. That's because our goal is to participate in the market's uptrend and grow assets while protecting assets when the markets correct and go into a downtrend. If you're interested in becoming a client, please reach out. And with that said, I'll wrap today's video. Today is Tuesday, July 16th, and this is Ted Zhang at Revere Asset Management, telling it like it is. Thank you for listening and have a great week.